Hi, this is Matthew Cratter from Trader University, and today I want to talk about why the Federal Reserve, is buying junk bonds. If you're worried about this financial crisis or just want to see what I'm trading, be sure to hit that subscribe button. So the basic problem the Fed has is that they've been lowering interest rates for many, many years. And in each good cycle, interest rates don't get that high. And so during a crisis, you can only lower them so far. So interest rates, short-term interest rates as set by the federal funds rate, have basically gone to zero. So what do you do to stimulate the economy when you've run out of sort of interest rate cutting ammo? Well, back in 2008 and 2009, the Fed began what they call quantitative easing. They started buying mortgage-backed securities. They started buying U.S. treasuries as well. And so you have this weird situation where one part of the government issues debt, namely treasuries, and then the Fed creates new money and buys those treasuries in a bid to inject cash into the economy. So it just came out last week, and I haven't talked about it much yet, but I think it's an extremely important story that the Fed is now going to buy junk bonds. Now, junk bonds are the impolite name for high yield bonds. Companies that issue high yield bonds are companies that already have a lot of debt, are using a lot of leverage, and usually have some flaws in their business model. They're difficult to lend to, and so just like a credit card borrower who doesn't have a very good credit rating, they need to be charged. These high yield companies need to be charged much higher interest rates to borrow. And so they issue a type of debt called junk bonds or high yield bonds. And now we've discovered that the Fed announced last week that they're actually going to buy these junk bonds, which are extremely, extremely risky securities. Many of these companies will not make it through the recession. Now, where does the Fed get the money to buy these bonds? Well, it's very easy. They have something called a printing press, and they just make new US dollars. And then they use it to buy bonds, to buy mortgage backs, to buy treasuries, and to buy junk bonds. Now, they said they'll buy bonds, junk bonds directly and also through ETFs. And so I thought I'd look at a couple of these high yield or junk bond ETFs. This is HYG, and you can see how since the Fed's announcement, it really bounced up quite a bit. So HYG is one, JNK is another one. And these have recovered just enormously. They're not quite back to where they were before the financial crisis started, but they've bounced heavily simply because you have a government entity. Not technically the federal government, but still one of our elite institutions basically printing new dollars, debasing the US dollar, devaluing the US dollar, and then taking them and basically buying junk. So it'd be interesting to take a look inside of these junk bond ETFs to see exactly what the Fed is buying and who they're bailing out. This is courtesy of Shrubbery COVID Capital 19. Looks like an anonymous account on Twitter, but they did some very, very good analysis about what are the constituents in these junk bond ETFs. So I thought I'd just quickly go through some of them to give you an idea of who we are bailing out by debasing the U.S. currency, by basically picking your pocket and mine, destroying our savings, destroying the purchasing power of the U.S. dollar. Who's benefiting? We'll start with Bausch Health. They have junk bonds that are in these ETFs. They used to be called Valiant Pharma, company that committed fraud and has fallen on hard times. Obviously, has to issue junk bonds at this point. The next one we'll cover is an Italian bank. The Fed is actually helping to bail out this Italian bank by propping up their debt. This is called Intesa. Next, a French telecom operator, highly leveraged company that's had a lot of problems, has to issue its debt in the junk bond market. So we're actually helping out the ECB here, the European Central Bank, and we're helping out. Again, these are private companies or publicly traded companies that your and my dollars are bailing out. Next, PetSmart. PetSmart, obviously, pet food, pet store. They went private a couple years ago as part of a private equity deal. So we're actually helping private equity firms as well by propping up PetSmart. Hardly something to be considered something that's essential to the health of human beings or really the U.S. economy. Uber has some bonds in these ETFs, and so they are also receiving a bailout. And the fact that they have to issue junk bonds should tell you junk bonds are actually ahead of the equity. So it tells you how dangerous it is to hold the stock of Uber. Next, we have Netflix. Netflix, obviously, we've all been enjoying quite a bit lately. It doesn't seem fair, though. It doesn't seem essential to the economy. If Netflix needs to raise more money, they should sell more shares of stock. But we really shouldn't have the Federal Reserve buying Netflix bonds, especially when the CEO is a billionaire, $4.2 billion. Carl Icahn, very famous finance guy, he has 6 different companies that have bonds in this ETF. And so we're helping to prop up his empire. Carl Icahn, net worth of about $14 billion. Finally, of course, you knew it would be here. Tesla junk bonds also being propped up by the Fed buying. So you got to hand it to Elon. He's always there to collect government subsidies. And government subsidies right now exist mainly for billionaire holders. This is not something that is helping Tesla employees. They're still slashing employee pay. They're furloughing employees. And they just announced on CNBC this morning that Tesla is also not paying its rent. So hurting landlords. At the same time, they're getting this government support by the buying of their bonds. Just to remind you, Elon Musk, $32 billion net worth. Meanwhile, while this is all happening sort of in the finance economy, JP Morgan just raised their borrowing standards if you want to get a mortgage from them. Now you'll need to put at least 20% down and have a credit rating of over 700%. A FICO score of over 700. This at the same time, if you want to pretend that Boeing is like a consumer borrower, Boeing is basically junk as well. They're allowed to borrow billions, and I believe their bonds are in these ETFs as well. And so I thought this was a great meme. Boeing, can I please have $50 billion? Easy to print out money for them. Average consumer, can I please have $2,000? Printer broken. And it turns out it's going to be more like $1,200, and not everyone's going to get it. So the difficult thing about the market today is it's trading not on fundamentals. It's trading based on the Fed picking winners and losers, as we can see with this chart of the junk bond ETFs. If the Fed weren't buying, you could be sure that we would be trading down here. But we have this really weird situation where the Fed is actually printing money, using it to prop up this market. And when you prop up the junk bond market, it helps to support the stock market as well. And so if you want to trade this market, there are really 3 fundamentals that you have to keep your eyes on. And it's one reason I've been on the sidelines. I think it's a very difficult market to trade. I've been long Bitcoin. I think that really benefits from all this money printing, Bitcoin and gold, and high quality real estate as well. But if you want to trade stocks, and a lot of you have been asking me, is it the right time to buy stocks? And it's a hard question. I think we see lower lows on the stock market. I could be wrong. But the inputs to this are the course of the virus, the COVID-19, how quickly we can get vaccines out, how quickly we can get antivirals out. So that's part 1 of 3, just the virus as it makes its way around the globe, and also as it comes back, as shutdowns are lifted and people go back to work, do we get spikes? So you almost have to be a virologist or have some scientific view. So we've got the virus. We've got the central bank money printers. How much are they going to print? Who are they going to choose to bail out now? Are they going to buy equities in addition to junk bonds? Or will they back off because the US dollar begins to devalue too quickly? So virus, central bank money printers, and then of course other policy responses from the president, from Congress, from the people, quote unquote, in charge. And so I thought this quote from Northman trader Sven Henrich was really good in terms of thinking about value investing and long-term holds in the stock market. And he says in this tweet, how do you value assets based on fundamentals when entities, namely the central banks and the Fed, who have been assigned unlimited buying power, buy everything they can regardless of fundamentals. Do they keep buying? Do they keep printing money and buying? Or do they decide to let things roll over again? These are very, very difficult questions. We can see that the junk bonds have really run into some resistance here at the 50-day moving average. When you don't know what fundamentals to trade, traders will often rely on these lines in the sand, like the 50-day moving average, the 200-day moving average. And so that's really, or maybe this is where the Fed stops buying. They buy and pin the price of the junk bond ETFs close to the 50-day moving average. Of course, this 50-day moving average is slowly sloping downward, so it could continue moving lower. But this is the state of the market we're in, where definitely, technicals are interesting here. This might be an interesting short, possibly, but it's not something you don't want to go against this guy when you're shorting, because they can just keep buying. So it's a difficult environment, difficult for trading, even difficult for long-term investing. Do you just buy these junk bond ETFs and expect the Fed to have your back? Or do you just step away? And to a certain extent, I've really stepped away for now. I think this is too hard of a market. Made a lot of money in the last bull market trading momentum stocks, and expect to make a lot of money holding Bitcoin over the next couple of years. But if you're going to be trading, looking at fundamentals, I know I've done some videos on fundamentals, but they don't really matter in this environment. They will matter over very long holding periods probably. But in this environment, you've basically got the virus, you've got the money printers, and you've got the Congress and the president, as well as other foreign governments and the actions they take and the actions of foreign central banks. But trading on fundamentals here, trading on where things should be trading, given that we're in a deep recession, clearly lots of people's incomes have gone to zero, lots of companies' revenues have gone to zero. It's a very, very difficult environment. So one thing I encourage everyone to do, take this time to watch all my free YouTubes, read my books. They're available on Amazon for just $2.99. And then if you want to really go a little bit deeper, you can also check out my online courses. I'll stick a link in the description notes below, and make sure you use the code that I'll put down there, the coupon code YT99, to get the best deal on a monthly subscription to Trader University of my courses. Hope you guys found this helpful. If you did, please hit that subscribe and like button. Let me know your questions and comments in the comment section below. Hope you're all staying well, and I'll see you in the next video.